All right, guys, back with another video. So today we're going to talk about 6 things that every person that ever thinks about trading options in the stock market should know. So if you don't know what an option is, I'm gonna go over really simple because, like I said, there's so many videos on what that is. But basically, an option in the stock market is when you think that a stock is going to move a certain way, either up or down, within a certain amount of time. So, for example, you got ABC stock. Let's just say it's trading at $50 a share. You think that's going to go to $60 a share within the next 3 weeks. So you buy an option saying that in, let's just say, what I say, 2 weeks, 3 weeks, that the stock's gonna go up to $60. That option might cost, I don't know, $100. Let's just say for the sake of example. And then what ends up happening is you pay $100 for that option. So what happens is that ABC stock has, for the example, 3 weeks to go up to $60 or higher for you to make a profit. So what happens is if you don't want that stock, you sell the option back to the open market. So maybe, let's just say for the sake of example, ABC stock goes up to $60 a share. Now that $100 you paid for that $50 option is now worth, let's just say, $300. You sell it, you keep the premium. So these are some 6 things that I want to talk about personally that I've learned from trading the stock market the last 4 months. So here's the thing. Number one, know the risk. What that means is that, if you go and buy an option, let's just say that the option is $100. Are you comfortable possibly losing $100? Don't take bill money in trading the stock market. I hear horror stories about people taking, loans out, going, oh, I think this stock is going to hit it big, but the thing is, there's so many things that can go wrong, and it may not happen, and you're literally gambling. Don't do it. Like I said, just know your risk. Two, know your volatility. So, for example, I'm gonna give you an example. I had an option on Amazon when they were doing Amazon Prime. This was about maybe a few weeks ago. So I spent $1,740 on that option. So it was paying off really big. I want to say it got up to like 2,600 or something. So I had something going on today, and I had a disagreement with somebody, and I ended up going to the movies. So I usually check, my options from my phone every hour or so. So I happened to check my options. Something told me in the movies, let me check this and make sure, everything's cool. So I was up 900 for the day, and when I checked, I was down 300. So my Amazon stock plummeted from 2,600 all the way back to the 1,700 that it was at. So luckily I sold it. So I think I lost like what, $40 on that particular option. But the point is that it's very volatile, and you could be down. I actually had one stock. I had bought a whole bunch of Starbucks options. I remember that those options at one point, I think I spent like $35 per option. I bought like 10 of them, so it was worth $350. So an analyst downgraded Starbucks. So I want to say that it was only, I want to say I was negative like $300 for like a good like 2 3 days because Starbucks stock, it was just fluctuating back and forth. So I got scared and I sold it. So a week later, Starbucks went up 4 points. So my $350 would have been worth $900. So you get to know your volatility. Can you be down $200? Can you be down $500 $600 with those options? I mean, if you can't do it, don't get in over your head. Don't buy too many options. So number three, don't trade before earnings. I emphasize this. I've learned the hard way. Do not trade before earnings unless you are really familiar with that stock. So, for example, if you've been watching that stock for like months, you've done trades with that company, you know a lot about the company and where it's going, then that's fine, to each its own. But if you're just like going off what analysts are saying, they're like, oh, yeah, this stock is going to go up because we believe that the company has good, revenue and forecast and earnings per share and stuff. Let me tell you something. That means nothing. That don't mean shit. It means absolutely nothing. I'll give you an example. So I had an option on Costco. Costco was coming with their earnings. They're trading around $242 a share at the time. So I bought an option that expired the following week for the 252 strike price. I think it was like $110. So earnings came out for Costco. They beat on earnings. They beat on revenue. Their guidance was excellent, but people was pessimist because the stock was already up. I think, like I said, 300% for something like that for the year, or 200, no, 60% for the year, something like that. And it was like it can't go any higher. So their stock plummeted. It went down from like 242 to like 232. So anyway, I think that option was worth like $6 or $7. Like an idiot, I sold it. So a week later, Costco hit 252. So that option that I sold for $2, which I paid initially 109 for it or something like that, it was worth $400. I didn't have the patience to wait it out. So and then like I said, even though the earnings and the revenue and the guidance was good, the stock still plummeted. So you have no idea what's going to happen. So I say just stay away from earnings, man. Trade stocks that you know. Trade stocks that they have patterns that go up and down. So I would say do that. Stay away from earnings. So, another example. I had some options on DocuSign. So basically, what happened was I had bought two options. I think I spent like $380. I bought two options. So it went up all throughout the day. I want to say those two options for $380 got up to like $580. So DocuSign came out with their earnings. Earnings per share was good. Revenue was really good, but their forecast was crappy. So guess what? The stock plummeted. So I instantly lost all that money, all those profits for the day. So, but luckily I had other options, so I ended up being positive because, my other options offset my losses with those options, which is another thing. It's not really a tip, but you're gonna have losses. You're gonna have some options you choose. They're gonna be winners, and some are gonna be losers. That's just how it is. But you have way more winners than losers. You'll offset, whatever bad options you have. Number 4, you need to have patience. You absolutely have to go have patience. I always tell people, go long, go long. So at least minimum 2 weeks out. You need to give the stock some time because there's certain stocks that I trade. I try to stay away from high volatility stocks. That means, like, for example, they could start out, let's just say, at $90, and then they go up to $95, and then they go down to $85, and then they go back up to 95, then they go to 100, and they go back down to 90. I stay away from those types of stocks. It's really difficult to make money on those. You have to like almost time it. I like growth stocks, some that just steadily over time go up. So in other words, like one stock I was trading, I used to trade all the time, was Starbucks. Starbucks gradually always was going up. It might have a day or so where it drops like, 30, 40 cents. But within a 5-day period, it'll go up like, a point or so. It's just gradually working its way up. I can make money off stuff like that. You have to have patience. There might be a time where you buy an option, you might be down like 30, 40 bucks on that one option. If you bought 10, you might be down like $300, $400. But you have to give it time to go up or, go down if you got to put on it. Just give it time. And then finally, I will say this is the most important thing. Whatever your portfolio is, so let's just say you got like $2,000. Do not trade more than 20% of the time on options in your portfolio. The reason why is because there's some stuff that can happen that's way out of your control, and stuff can just reverse on you. Like, this actually just happened to me yesterday. This is the time where, right now, if you're watching this video, this is 2019, and we're in the Trump trade war. So this is the day after the Feds cut the interest rates. So what happened that day was I didn't understand what happened with the Feds. So long story short, all the stocks were up. Then around like 2 o'clock when the Feds cut the rates, all the stocks plummeted. Everything just plummeted. So I sold off what I could, but I couldn't sell certain things I couldn't sell because I bought those stocks the same day. And since I'm not day trading, I can, you can't buy a stock and sell in the same trade day. That's a day trade. That's for a whole other video. So I was up $300 that day. I ended up being down 280. I think, how much did I lose that day? I think I'm down $400 that day. It changed that fast. And then the following day, Trump, he announced tariffs. So what happened was I was up, I want to say about $900 because, like I said, the previous day everything fell. So everything was in recovery mode. So I was up like $900 around like 1 o'clock. So I want to say that I was going to the gym and I checked my phone, and then all of a sudden I'm down like $100. I was like, what happened? Everything plummeted. So Trump announced that he was going to put more tariffs on China. So the whole stock market plummeted. That was like a sucker punch. Like literally, nobody saw that. But the thing is luckily I didn't have my whole portfolio in there. So that's what I'm trying to tell you. Do not trade your whole portfolio one time, because even if it's a good day and all the stocks are going up and everybody's all happy and rainbows are out, it can change instantly. And the thing is that if you bought that option that day and you're not a day trader, you're stuck with that option. You can't get out. So you're literally just watching yourself bleed out. So just don't do it. Just stay away from putting your whole portfolio into the stock market. And finally, this should be a common sense. Don't be This is number 6. Don't be greedy. Okay? Have an exit strategy. So for example, say like you have a stock and you let's just say you have an option. You paid $100 for that option. And let's just say that the option is up $200. Get out. Don't be greedy. If you want to, you can always rebuy the option, or hell, you could buy another option with a further strike price. Yeah, you're deep in the money, you can make more money, but it could reverse on you so fast. Like I remember, I'll give you an example. So I remember, I bought the Gap stock. I bought the stock on the Gap. I put a put on it because retail was going down, and I've been doing my research. I knew it was going to go down. So right after the earnings, the Gap dropped. I think I had like 4 options on it. So those options were worth $800. So I was like, I'm gonna wait till the Gap gets to $17, and I'm gonna sell it. It gets like $17 and like 3 cents, right? And I was like, oh, 3 more pennies, and then it started going back up. It got up to 17.20, and I was like, oh, where'd it go back down? Got up to 17.40. Oh, where'd it go back down? Got all the way up to $17.80. Oh, it'll reverse. It got all the way up to $18.10, so I finally sold it. So instead of having $800, I made $500. Now it's not a big deal, but here's the thing: if I had waited, it ended up going all to $18 and like 70 some cent. So I would have actually, cashed out 300 instead of 500. So you have to have an exit strategy. So even if it gets to like $17.03, just say, you know what, or whatever. Let's just say you have an exit strategy between 15 and 17 or something. Let's just say the stock's trading at 16. Even if you get to 15 and 2 pennies, just let it go, man. You can always retrade in. Don't be greedy. You'll give all your profits back. I have personally done it. Many other people have done it too. So those are my tips. Like I said, there's a lot more tips out there, but option trading, like I said, just you want to know what you're getting yourself into. I mean, there's a lot of tutorials and stuff about indicators and stuff. What I do is personally, I watch a stock for 30 days. I'll just watch it. I don't care if it shoots through the roof and doubles or something. I don't care. I'm watching it for 30 days. I need to see how it moves. Because once you start seeing how a stock moves and you can start reading like the charts and stuff, then you pretty much know when to get in and you know when to get out. So those are my tips. If you decide to do option trading, good luck and I hope for the best for you. Peace until next time.